let's talk about 100% financing.
Yes.
So how do we get, I think it's more applicable towards the new construction, right? If somebody has booked a pre-construction, the closing is a couple years down the road, and if the value of the property at the time of closing, when they do the appraisal, is more than or at the value that they purchased it for, so there is a potential they can tap into that appraised or increased equity, and that they can use it towards the other purchase, right? Correct me if I'm wrong.
No, you're absolutely correct. Absolutely correct, except we've used 100% financing even for non-pre-con in some cases. And
Oh, great. I didn't know. Okay.
Yeah, it's not exactly 100%, but it's very close. So we'll talk about pre-con first. So there are some financial institutions out there that will basically provide up to 100% financing on a pre-construction purchase price, provided that the purchase agreement was signed over a year ago from the date of the financing or the closing, and provided that the value of the home has actually risen since the time of purchase. So
these are A lenders, right?
these are A lenders, yeah. So we have A lenders and B. So depending on the client situation, we will, and we have options for both.
Okay, great.
So what happens in that situation is, let's say somebody paid 10% in builder deposits, and they have purchased a property, let's say for 500,000. And so they've paid 50,000, and then they need 20% to close, but they don't have the money now, and they don't have money for closing cost. So what we can do is we can actually finance the full 500,000 purchase price, provided the property has increased to about 650.
Okay.
And then we basically get 80% financing on 650, not on their purchase price.
Amazing.
So we can actually get them their deposits back in some cases as well, which they can then redeploy again for renovations,
buying another properties or investing somewhere else.
Exactly.
That's amazing. And how do we apply this to the resale?
So to resale properties, 100% financing, there's a lot of solutions.
Has to be a long closing, right?
It doesn't always have to be a long closing. In some cases it does. Every situation is a little bit different, and we kind of plan with the client accordingly. But some of the programs for 100% financing are borrowed down payment. So without going into the specifics of exactly how that down payment is borrowed, banks, insurance companies allow use of certain banks and insurance companies allow use of borrowed down payment to fully fund the 5% minimum down.
Okay.
And then we have clients that sometimes have some gifted funds, and then some borrowed down payment is required. So basically between certain combination of certain available products, we can make up that 5%.
Okay.
And we can do 100% financing. So, if you have your closing cost, that's ideal. Or if you have 1-2%, like some savings, that's ideal. But usually these type of cases, you need a good credit score, and a good credit score is classified as someone who has 680 plus in Equifax.
Exactly.
At least one of the borrowers.
Okay. Well, this is great. This would be ideal for people like who are struggling with the down payment again. So I would say we have 3 or 4 different avenues of arranging down payment.
Yes.
As long as you have great credit score,
Yes.
your income is sufficient, no debts, no borrow well and all that insane amount of debts. They can easily borrow money using these 3 or 4 products that we have, and become homeowner. Instead of paying somebody else's mortgage, they can get into the place that they can call home, and then they can begin their home buying journey and make that generational wealth for their family.
Yeah.
Just by having that idea in their mind that they can be homeowner. They have to believe first, and then everything can happen from that point.